Hey, morning, everybody. This is Chris here, London Open Analysis for April 2nd. It's Thursday, and let's get started, guys. Sorry, I had to run around here and grab my power cord here for my computer. I wanted to sit by the door here and get some fresh air. It's morning time here, so it's a little later. It's 6 a.m. here, so let's get into it here. So first off, let's talk about the trade we did yesterday. That was the Aussie US, and we got in right after that spike because our belief was there was not really any fundamental basis to keep the Australian dollar propped up versus the US dollar, and you could see it drop down here into this level of basically buying, selling. It's just a strong volume level right here. So I actually clicked out of that and didn't wait for this target because it hit it within 2 hours. So it wasn't worth the risk for an extra 20 pips. It would have eventually hit the target anyway. So that's kind of a lesson for me. I played it safe on that spike because normally I don't trade the spikes, but it worked out well for us there. So trade I want to talk about today, a possible trade, let's take a look at it, is the Euro Swiss franc. It is been at this level right here for a very long time, between 105.50 and 106, and that seems to be the level that the S&B are propping it up. But there was a huge spike in coronavirus cases, and obviously this isn't great stuff to be talking about. It gives me no pleasure to say it, but a huge spike in coronavirus cases in Switzerland, and I think that's going to weigh on the Swiss franc, which has traditionally been known as that safe haven, that powerful currency. I think there will be a little bit more balancing out here with the euro versus the Swiss franc, because the Swiss franc is being impacted by it more so. So I predict that the euro will actually rise a little bit here. So this level right here, you can see it's kind of indecision here over the next over the last 2 hours, just about 2 hours here. So I'd be targeting probably up here. So let's see what the volume looks like up here at the top. I'm curious. Yeah, you can see right here there's a level, so you can see why it's kind of getting figured out. It's running into all this volume, but I think it's tested it almost 4 times now. So it's going to break through, in my opinion. So if we kind of go up to here, I would be interested in targeting 106.09. So a little bit below that. I'll probably go down to here where the volume starts first building up. So maybe 106.6. And then the risk would be below the lows here. At the London close, once again, the reason I like trading London close is most of the news has been digested, so it's typically a lot safer to take. Let's get down to 143. It's a lot safer to take these types of trades than you typically would take. Once again, because the news is, the fundamentals are really what drives it, and sentiment drives price action. So, if there's been a big move going into London close, typically there's a retracement unless there's some really, really strong data, and in that case, you can count on a continuation. So it's just a matter of, looking for that, looking for that fundamental news and being able to identify what is really, really strong, what's really market moving, that's going to move it for a week, 2 weeks, 3 weeks, and what has kind of moved it for the day, what's more sentiment as opposed to a fundamental change in an economy. So that's kind of how I'm looking at things here. Just get rid of this MACD. This was for an example yesterday. I don't want you guys to think I'm using the MACD here. There we go. So it's safe to get in here, and at 105.64, it's down a little bit. The risk to reward is 1.91, so that's a very, very strong reward to risk ratio here. And I'm pretty confident in this trade that it's going to hit. So, if you have any questions, let me know on this one, but I think this is good. So with that being said, let's take a look and see what else is going on in the market and see if there's anything interesting that could possibly set something up for the rest of the week. Oh, I want to leave. Yes. Yeah, so I did London close a little bit later today. It's 6 a.m. Normally it's 5 a.m. here in Hawaii because we don't change our time. And, I actually kind of like trading more at the end of the London close session because it tends to be real volatile between 4 and 5 p.m. London time. And then at 5 p.m., you've kind of decided, is it going to, retrace back, or is it going to go in a different direction? So, hence why I wanted to start today, because I knew there was some information going on. But one other big piece of news that I'll share with you, this is bad, that I saw this morning was this right here. So Saudi Arabia is willing to cut production of oil, or cut, basically doing the cuts, and that it's asking U.S., Canada, Mexico, others to join the cuts to prop up oil prices. And the consensus here, and this is a good point, is Mexico getting on board, because they already cut the entire year. Mexico's economy is in tatters right now, because if the U.S. isn't working, Mexico definitely ain't working. So it's going to be interesting how this works out. But oil was bumped up a bit here. So I like to look at this site here at CNBC. It tells me, this is all free stuff that you can pull, and this is literally what I use to make money almost every day here in the market. So, I mean, oil was at like $20 yesterday, so it's up 5%. That's huge. Or excuse me, $5 up almost 25%. I mean, that's ridiculous. So expect oil to be propped up here for a little while, because that, the markets have been waiting for anything they can to hold on to here for some positive news. One other piece of news on oil is, because China's economy is largely resuming, they have purchased a large amount of oil, and they purchased it at a low price to fill up their stockpiles. So that's going to definitely give oil a nice little bounce there. Obviously, oil's not going to move up substantially until there's a confirmed cut worldwide, or the world economies start moving again here. So that is kind of what's going on in the oil market here, and it always kind of there's value in keeping an eye on what's going on with there, because that affects what's called commodity currencies. So the Canadian dollar is definitely a commodity currency. Also, it's interesting. The U.S. is becoming somewhat of a commodity currency, because they do produce so much oil now during Trump's regime, the MAGA days, I'll call them. So, the dollar was propped up a little bit today too. So the dollar's getting propped up, being a safe haven, and with the oil increase, and you can see that on. Let's go to this heat map here. This is something I like to look at the beginning of every day. Let's see. Let's go to the heat map. Oops. I think we need to. There we go. Don't know why it's not. Not showing me the heat map. There we go. Got it. Don't know what happened there. You can see it shows you all the major currencies here and kind of where it's at. So I remember at the beginning of Asia and through Asia, US was down substantially. But now they're up. Euro's getting pounded. So is the Swiss franc, you can see, versus the Canadian dollar down 1.19%. I mean, look at this. Canadian dollar bought across the board. And that tells you there's some real strength in a currency and there's a real move being made, because if it's more of like a sentiment, you'll see kind of a mixed move. If it's really, really strong, I mean, the currency's up versus every major currency, cross sell. So, I mean, you can see Swiss franc's down. You know, the yen is down right now, so obviously there's a positive. It's still up versus the euro and the Swiss franc. So the Swiss franc is just getting destroyed. Euro's just crap right now. I mean, you can see this. It's down almost 1% versus the pound, which is interesting. I'm not sure why, but there was an announcement yesterday that British Airways was cutting their employees and cutting on flights. So I would have anticipated that to hurt the pound here a little bit more than it did. So that was interesting to me, but still up. So you can see, though, it's down versus Canadian dollar. So I would anticipate, if you look at the pound, there might be a move in selling the pound right now, because fundamentally, you know, they're getting crushed with coronavirus. You know, the economy's on shutdown right now. I can't see what would be holding these guys up. I mean, the euro is going to get battered as well, but I would say, you know, a move to make might be the pound Aussie, because I think as China gets rolling, I think that's going to help the Australian dollar. And the prime minister, I believe, was the first one to mention an actual end date to this whole stuff, which was 90 days, and I think that was like a week ago. So, you know, he's kind of giving people some hope there. And you can see it's a little mixed. So let's take a look at that. I'm curious to see what the pound Aussie is looking like right now. No, don't know what happened to our trade move, but let's take a look at the pound Aussie. Yeah, you can already see it's already dropped like a rock. This might be a good one to move. So what I would like to see would be some type of retracement on this 30-minute here. So I would like to see, let's take a look. See what the volume looks like. Oh, that's interesting. So you know what? I think this move's already started. This could be a really cool little trade as well, because it's already dropped below it. Let's raise this. So it's at, what are we looking at? 205.53, 204.53 right now. So that's interesting. There's a big volume cluster right here. So I would anticipate, if this thing closes below this level here, I'd like a retracement back up to the top here at 204.72, and then I'd be a seller down to this level here. I mean, that could be like a 200 pip move here. So we'll keep an eye on that one. I think this one's going to take Asia to play out. So I don't know if this will be a tradable London close move right now, but just want to give you guys some ideas. Could be a nice little possibility here. I do tend to like the 30-minute charts, so below that to me is a little too little. 1 hours are good too as well. So I had to trade kind of the daily move that I trade here. So so that's an interesting possibility. Let's take a look at Forex Factory and see if there's anything else. Oh, why is it not saving this stuff? That's okay. Let's go. Let's take a look here. This is a cool little way to see what's going on. And then also, I do like to keep an eye on what's going on with China, and you can see high impact and medium impact news. I believe we're going to have all this information on our live trade room anyway, so we're going to pull all this data for you. You don't need to go looking elsewhere for this stuff. But it's kind of cool for me to look at this because I can see some currencies and what's going on, and then read some of the headlines here. It's always good to kind of keep an eye on what's going on in the markets, fundamentally, and if there's any sentiment changes, especially in this day and age with the coronavirus and where we're at. I mean, things can change rapidly here. So, I guess today would be the big topic I want to kind of talk about that relates to trading is stop losses. So, why do you want to have a stop loss? Well, me and Nick were watching on YouTube the other day. They have this page that just shows people blowing up their accounts, and they're taking crazy leverage. And all kidding aside, it's actually not that funny when you think about it, because people are just losing money like that. I mean, it's like you're throwing money on the roulette table and you're picking red or black. And when you try to trade professionally and when you try to make an income from this and make money consistently, you have to be very, very disciplined. And that's where a stop loss comes into play. And, really how you're trading is you're forming an idea, you're forming a hypothesis. And this is what's so interesting about the markets is you look at all the data and you form your idea that, okay, this trade is likely to go here. This currency is likely to go this way. But what you've got to plan for is there is a possibility that it won't go the direction you think it's going to go. And at what level, or at what price do you decide, okay, it's not doing what I thought it was going to do, it's time to cut this thing? And that's why you want to have a stop loss, because if you don't, best case scenario, it'll run against you and it'll come back up and you'll break even. Okay, so is it worth risking your entire account to cross your fingers and hope that it breaks even? No, it's not. So, and the thing about it is it only has to happen once, where the likelihood is that it'll come up to your original level and you can get out with a break even. But do you want to risk your whole account to find out? Because once again, it only has to happen once. And I've seen it. You type in YouTube and go to YouTube and type in blown Forex accounts and watch. And you'll see people just leverage up to the hilt and no stop. And in an instant, their whole account's gone. We're talking thousands of dollars sometimes. So you got to protect yourself. So just think of that stop loss is the level where it's not going in your direction. Now, on the flip side of that, brokers and not brokers, excuse me, funds and big market players that are making moves, and also banks have access to liquidity profiles that can see where levels are. So they know where lots of liquidity is. So it's not that they're trying to take your stop out, it's that they're trying to move it in a certain direction and they need liquidity in order to do that. So they, for every person that's selling the dollar or buying the dollar, there has to be sellers of the dollar. So that's why you hear a lot about stop hunters, and it's not that they're trying to hunt your stop, it's that they're just trying to find liquidity to move it in the direction they need to move it in. So knowing that, you don't want your stop to be too predictable. So, putting it below like a fractal, that's predictable. but sometimes they'll spike it below a certain level to continue it because they need liquidity and they want to get a better price to move it more in the direction they're trying to move it in for the day. So you want to have a stop, but you can't be too predictable in the stop. So like a good practice that I like to do is I'll actually put my stop based on what the spread is for the currency and how and the pair and how fast and far it moves. Is I'll actually put my stop maybe 20 pips below where I'm actually going to have it stopped out at. And if it gets close to where my mental stop, I'll take a look at it. And if that sucker's moving, I click out of it. I'm out. But if it hits it really quick and then spikes back up, I know that level is a little bit more protected. So I'll wait it out a little bit. So that's a little bit more advanced, and you have to kind of, it's more of a trial and error thing. And there's been times where it's hit my emergency stop, and you take more of a loss on it than you want to take. But I find that saves me from getting stopped out too fast on some good moves. So that's something you might want to look at as well. So maybe when I have an example of that, I'll show you how it happened and what happened, and that'll be good for a London analysis here. But London close, especially if you trade early in London close and you're looking for a retracement, it does tend to happen sometimes. What'll happen is the dealing desks in London, they'll spike it down to get to that level they need to get it to hit their objectives, hit their goals. And when they get out, you see a real big spike back up. So once again, this is all things that you'll learn with us, and we'll talk about more in detail. But that's the interesting part about FX and the markets. It's so diverse, and there's a lot going on. So it's more than just a chart and indicators. You have to kind of know, how the market works, how do the fundamentals come into place, how does sentiment come into place, and you have to think in terms of probabilities, not not expectations. Like the market's not going to give you money every day because you want it. You have to kind of be on the side of the market and kind of go in the direction of the market. Where is it taking where's it taking you, and make sure you're on the right side of that more often than you're not. That's kind of how things work. And believe me, I've blown accounts, I've lost money through the years, and it's taken me a long time to figure it out. But once you figure it out, it's fun and it's nice, and you can make money from this thing. So that's my soapbox rant of the day, and we'll catch you tomorrow. Let's see how that Euro Swiss franc trade plays out, and hopefully we'll be in the money again. All right, thanks guys, have a good day, and I'll catch you tomorrow.